What's up, traders? Welcome back to another Liquid FX video. So here we're going to be discussing the concept of premium versus discount, right? And how you can apply PD arrays in your structural analysis on the markets, right? So when we refer to premium and discount, what we're looking for is very simply a higher low to be in the discount or a lower high to be in the premium. And what do we mean by that? So if we have bullish structure, right? Let's say we're in a bullish market, okay? Now, we're in a bullish market like this, so we're seeing clear breaks of structure to the upside, right? We see the break of structure here. We see a break of structure here, and we're just seeing the market giving us new continuous highs in the market each and every day. Now, from here, it's important to understand how we can use a premium discount tool, right? So it's the Fibonacci tool, the premium and discount tool. They can be referred to the same thing. I'm going to refer to them interchangeably. So what we want to do is we want to simply place our fib tool starting from the low, and we want to go all the way up to the swing high, just like this, right? So where does the concept of a premium and discount come into the market, right? So the place that we're looking for it is essentially in this region over here, right? And the secret to understanding discount zones first is that it is below the 0.5 level, right? So what's happening is when we have a swing structure in this case, right, we have a low and we have a high, right? So price has given us a swing high. Price has given us a swing high. And price has come down, giving us a swing low in this region. Now from here, when we get our pullback, but before we do our pullback, we have our low and our high. So it's very important to understand the first thing is that we want to project, we want to use the fib tool from the swing low up to the swing high. So it's from the low up to the high. Now, when it comes to finding the correct order block, we may have a fair value gap here in this region. This may be an OB, right? This might be an order block. But this might be an order block. But this might be an order block. So you now have to ask yourself, which order block are you going to go for? Are you going to go for this one? Are you going to go for this one? Or are you going to go for this one? Now the correct answer based off premium and discount will be the last of the three, right? So we're going to be going for this one over here, because we need to understand that this order block, right, this order block right here, oh, if I make that into the correct color, this order block right here is essentially firmly into the discount, right? So we see it below the 0.5 level, just over here. And this is what validates our order block, right? This is one of the very important things to finding an order block or a POI, is that we must be firmly in the discount below the 0.5 level. So if we take this now and apply it to the schematic previously on the left, what we begin to see, yeah, is we see price giving us a sequence of highs and lower high and lower highs and highs and lower highs in this region, right? Each lower high has to be below the 0.5 level. So if we take our fib tool from the swing low up to the swing high, we are again looking for a low to be produced below the 0.5 level in the discount, okay? This is incredibly important to understand, right? So we want to be essentially buying low. We want our positions. We want to be buying at a discount price. We want to be buying when the prices are low and then selling them when they're high. And now we're going to go over a bullish example here on gold, okay? If I just get rid of this and we go up a notch. Premium and discount arrays here on gold. So this is the gold chart going back to November of 2023. Now, if we just mark out our structure over here, right, we have a swing low produced by the market over here and a swing high. And we have a swing low with this structural low being broken. Now we have a break of structure in this region, okay? So from here, when it comes to identifying our POIs, it's important to understand that we have our swing low in this region and we have our swing high over here in this region over here, okay? If I make this a bit more accurate, we have a swing high and a swing low in this region. Now when it comes to choosing our POI, we know that our POI has to be in the discount, right? Leaving a fair value gap, okay? So this would be our OB. Now it doesn't really matter what happens in terms of whether price reaches it or not. There could be other reasons for that, but in this video we're looking primarily at premium and discount zones, right? So when it comes to identifying your order block, this is how you would do it. order block identification will come from understanding that we've had a break of structure in this region. So we've seen price break structure marked out with the arrow. So we've seen a clear break of structure. We've seen price leave a fair value gap in this region. And we see price giving us an area below the 0.5 level over here, right? Giving us our valid order block. Now if we continue to go on here to the right, we'll be able to see some more examples of this, right? Where we see price giving us a low in this region, and we see price giving us a high all the way up here. So we've seen another break of structure. Now from here, it's important to understand there's two potential order blocks over here. You can probably identify them now just by going off the rules. This is going to be our extreme order block over here. This is our extreme order block. Now this is an extreme order block because it's in the extreme discount. This is the low, and this is the high. So this is our order block in deep discount. Okay. Now our second order block is going to be just below the 0.5 level in this region over here. Now what makes this an order block? Because we see it in the discount below the 0.5 level, which is over here. Below the 0.5 level, and it left a clear fair value gap. But the important thing to understand from this video is that we see price trading below the 0.5 level, so it's in the discount, and this is the discount zone. This is the discount. Now from here, we need to understand that price is going to be buying. The market's going to look to buy up positions in the discount below the 0.5 level, and this is what we're taking advantage of in this region, okay? So we understand that we're in the discount, and this is where our order blocks are going to be placed, right? Now, if we continue on, just one more example. Here's another example, right? So we have our new projection, our new structural projection, from the swing low all the way up to the swing high, okay? Now what do we see from the market? Now that this structure has been broken over here to the left, so we see a structural break over here, marked out in the arrow. So this is our break of structure over here. Now from here, as we see price come down, we see price coming down into the discount region, below the 0.5 level, okay? So this is essentially what we're looking for. Now our POI, or our order block, is where the fair value gap was left. And this is a perfect example of how you can use premium and discount in your trading, right? So we see an order block in this region over here, in the discount, firmly in the discount, below the 0.5 level. Below the 0.5. So if you were trading just 15-minute entries, you would want to take something like this. You can have your stop loss just below the order block, and you can target either Asian highs or the previous structural high over here, giving us a beautiful 1 to 5 trade. So this is how you use the premium and discount tool to take buys, right? Now, it's the exact same concept when you're looking at sells, exactly the same concept. So if we quickly go over the schematic for that, if we're in a bear market, our higher lows will have to be in a premium range, right? Our higher lows in a premium range. Our higher lows in a premium range. This is what we're looking for. This is exactly what we're looking for over here. So we see if we just use our fib tool to project, it's important to understand that the higher low over here, the higher low is above the 0.5 level. This time it's above the 0.5 level, okay? We see the same thing over here when we use our fib tool from the high down to the low. We see price heading above the 0.5 level. And we see this same cycle repeat over and over again when we're looking for PD arrays or premium and discount arrays. So it's important to get your pricing to be 100% accurate when finding those high probability order blocks. If we go through an example here on the chart for gold again, now we see price break structure to the downside in this region over here, right? So where are we? So now, if we go to more recent structure on gold, what we see here is we see a shift of structure from bullish down to bearish. Okay, so now what we see is we see price giving us bullish structure turn bearish, right? So this here represents the bearish shift in structure, okay? This here represents the bearish shift. If I get rid of the PD array tools, this here was our breaker structure, marked here with the BOS. So from here we want to look for a high that's above the 0.5 level. So again, you want to get your projection tool out, your fib tool or your premium or discount tool, from the swing high all the way down to the swing low, just over here. Now what do we see? We see a fair value gap just over here on the 50-minute time frame. And this here confirms our bearish trade, our bearish order block. So here we have a bearish OB. Here we have a bearish OB. It's important to understand that we have a breaker structure. We see price head above the 0.5 level. Above the 0.5 level, right, leaving a fair value gap. So our overall trade will be in this region. So you want to have your stop loss just above the order block, and you want to target the next previous low over here, weak low over here. That's one example. Let's look at another example here on gold. So if we now go down here, we have another structural range to work with. So we see price giving us a high and a low, a high and another low. So now let's look at this structural range over here. So this high down to this low, right? So this high all the way down to this low. Now, where does the order block occur, and how can we use PD arrays to our advantage? Now, the question is, we have a fair value gap right over here. So this is an extreme bearish POI in this region, extreme, right? So now that we've targeted the extreme, what's happening here is we have an order block or an OB that leaves a fair value gap that breaks structure down here at the bottom, and it's priced firmly in the discount, in the premium, right? Firm premium, deep premium, or firm premium, right? And now from here, again, you can take a trade from here at the vicinity of the order block. You can have your stop loss just above the order block, like I've done over here. And where do you target? You've got a lot of targets. You've got Asian liquidity, you've got fair value gaps over here, all the way down to this low over here, right? 1 to 7 trade this is, right? So again, using the PD array, you can get some pretty accurate trades if you know the direction, based on the idea of premium versus discount. Okay? That was a quick summary of the price action so far on gold. So just summing that up, there's two things we want to look for. When we've got bullish structure, right? When we've got bullish structure, we look for discounted highs, discounted lows, right? So we're looking for price to give a discount over here. And when we have bearish structure, we're looking for the opposite. We're looking for price to give us a premium in this region over here. So when we are looking for PD arrays, you want to make sure that all of your order blocks and POIs all match up with the concepts. You want to see a breaker structure, a fair value gap, and for bullish POIs, you want to be in the discount, and for bearish POIs, you want to be in the premium. So that's a very quick sum up of how we use PD arrays. If you like this video, give it a like, give it a thumbs up, and I look forward to seeing you all in the next one.